Hey everyone, welcome back to Corporate Decoder, the place where let's just say sometimes a company sells something and we get to look at the confetti left behind. Today we're diving into a filing from Medalist, Diversified REIT, Incorporated. Now, REITs are companies that own, operate, or finance income, producing real estate. Think of them as real estate investors for the masses. And what we're looking at today is a snapshot of a recent transaction for this particular REIT. So what exactly is this document? It's an 8K filing, which basically means something big and important just happened that the public needs to know about right away. It is like a public announcement of a major event that could affect how investors see the company. And the big event here is a sale of assets. Specifically, Medalist Diversified REIT, Incorporated, or MDR as it is traded on the Nasdaq Capital Market, through one of its subsidiaries sold a property. This property was known as the Salisbury Marketplace Shopping Centre. Now, who is C. Brentwin Jr.? Well, he's the Chief Financial Officer, and he signed off on this report confirming everything we're about to discuss. It's his job to make sure that the financial story being told here is accurate. So let's talk about this sale. The property in question is the Salisbury Marketplace Shopping Centre. The deal was first agreed upon back in August of 2025 and finalised on the 23rd of October 2025. This wasn't a small transaction either. The company received a cool $9,930,000 for it. That is a pretty significant chunk of change for a shopping centre. The filing explicitly states this was an arm's length negotiation with an unaffiliated purchaser. What does that mean? It means they dealt with someone who wasn't already connected to the company, which generally points to a fair market value being paid. It's not some inside deal. And what's the company going to do with all that cash? Well, they're planning to put a good chunk of it towards paying down some of their existing debt. This is a common and generally smart move. When a company can use proceeds from selling an asset to reduce its debt, it strengthens its financial position. It means less interest payments in the future and a healthier balance sheet overall. For a real estate investment trust, managing debt effectively is crucial to profitability and stability. Now, let's get into the nitty-gritty of what this sale might mean. Selling a shopping centre can signal a few things. On one hand, it could mean the company is strategically divesting itself of underperforming or non-core assets. Perhaps this particular shopping centre wasn't generating the kind of returns they wanted, or it didn't fit with their long-term vision. On the other hand, it could also indicate a need for cash, and they're willing to sell off assets to shore up their finances or fund other opportunities. From a Warren Buffett perspective, we'd want to ask, was this sale at a good price? Did it enhance the company's intrinsic value over the long term? Paying down debt is generally a positive signal, especially if interest rates are high or if the company's debt load was becoming a burden. The fact that they are using the proceeds to reduce debt suggests they are prioritizing financial health, which is a good sign. We don't have a whole lot of detailed financial tables in this specific 8K report, as it's focused on the completion of an asset sale. Usually in their quarterly or annual reports, you'd see detailed income statements, balance sheets, and cash flow statements. Those are the documents where we can really dig into revenue growth, profit margins, operating expenses, and how the company is managing its portfolio. But based on this filing, the key takeaway is that Medalist Diversified REIT, Incorporated, sold a property for nearly $10 million and plans to use that money to reduce debt. It speaks to a management team that is actively managing its assets and its balance sheet to improve the company's financial foundation. So, what is my take on this? Selling a significant asset like a shopping centre is a big move. The company is clearly making a strategic decision to generate cash and reduce its financial obligations. This action in itself is generally a positive step towards improving financial stability, assuming the sale price was fair and the debt reduction is meaningful. The real test, of course, will be how the company deploys its capital going forward and how its remaining portfolio performs. Investors will be watching closely to see if this is part of a broader strategy to focus on more profitable or growth-oriented assets. One notable risk is that if they sell off too many income, generating properties without a clear plan to replace that income, it could impact future revenue. But for now, the focus on debt reduction is a prudent measure. Alright, that is our quick decode of Medalist Diversified REIT, Incorporated's recent asset sale. What is your take on this transaction? Do you think it is a good move for the company? Drop your thoughts in the comments below. If you found this breakdown helpful, please hit that like button. It really helps us out, and don't forget to subscribe for more deep dives into corporate filings. Also, be sure to check out our Discord community in the description below where we discuss these things further. Thanks for watching, and we'll see you in the next one.